Assalamualaikum warahmatullahi wabarakatuh. Saya harap semua sihat ya. Okay, today we will look at in question 11 for topic in deferred tax asset, deferred taxation or income tax in the textbook chapter 16 volume 1. Okay, for example 11, basically we already touched this similar question or a bit type of this question in my slide previously. So if you see this question regarding two types of asset, one type of asset, another one is liability. Okay, on the first paragraph, if you see, on 1st January 2002, company purchased machine at a cost of 100,000. Okay, for tax purpose, the machine qualified for initial allowance and annual allowance of 20%. For each accounting purpose, the machine is being depreciated over its estimated useful life, 10 years on straight line method. Okay, secondly, for the year ended 31st December year 2, it records a profit before tax 50 million. This profit is after the inclusion of provision of warranty expense of 11,000 that is recognized as a liability in SOFP. Income tax rate given at 24% for the year ended 31st December year 2. Question: compute deferred tax asset accounts using time difference approach and temporary difference approach. Okay, basically our method is using temporary difference approach as per slides that I've given before and we attempted before. Okay, for this question, the answer in the solution give two types as accordance to the question. There is timing differences and temporary differences. Okay, what you need to do is to construct a table. Therefore, I teach you on how to settle the answer. Okay, so at today, okay, so what you need to do is to write down the machines, okay, and the column is column carrying amount and tax base. Okay, for carrying amount, we will get the cost of asset is 100,000, depreciation 10,000, total carrying amount 90,000. For tax base, machine will less IA or initial allowance 20% equivalent to 20,000, annual allowance 20% equivalent to 20,000. Therefore, the carrying amount or the balance is 60. So we bring down 90,000 to here, then we compare. Since this is asset, whenever asset, carrying amount of asset is more than tax base, so it will affect on TTD. Therefore, we write down the difference 30,000 under column TTD. Okay, as per the other one is a provision for warranty. As we all know, provision warranty, we classify its nature as liability. So therefore, the carrying amount is 12,000. But as you all know, company in year 2002 does not incur under tax rules 12,000. Therefore, we will put nil. Since this is 12,000 liability more than tax base, it will give effect to DTD or deductible temporary difference. So what we need to do, we will total up the total temporary differences here as 30,000 and 12,000. Next, write down the calculation for TTD 30,000 and DTD 12,000. Therefore, the balance is 30 less 12 equivalent to 18,000. So TTD will give effect to deferred tax liability. This is already mentioned in my slide. Alright, and then to get DTL, formula is TTD times tax rate. Tax rate given in the question is 24%. Therefore, whenever you multiply, you will get 4320. Okay, in the presentation of soft P, we will prepare, since we know deferred tax liability we will disclose under non-current liability. Therefore, in soft P, we will disclose deferred tax liability total 4320. Okay, that's all for example number 11.